on WBRN Radio and on the Bostonred Network. The Numbers Man show on the 18th of January 2020. We did a show a few days ago, but much information has arrived since that time. We have the Beige Book. It came out on the 15th of January, and also the Producer Price Index for December. We also have housing starts, a number of parameters that we can look at as to where the economy is. But the top item is the trade agreement between the U.S. and Canada. There is one. That's the U.S., Canada, Mexico. But I'm thinking of the one between the U.S. and China. Basically, what it boils down to, the Chinese in the next 2 years buy $2 billion worth of product from the U.S., various product, agricultural products, etc., and a relaxation of some of the intellectual property requirements that companies will not have to put up their source code to do business in China. And in the agreement, there is roughly about 50 mentions of what China will do, and there's only 10 or 11 of what the U.S. will do. It's not on balance, but one has to take note that China, although it is the number 2 in the world, it is still an emerging economy. They now average about 10,000 yuan per person. Now we're talking about 1.2 billion people or more there in their economy, and they're also making a transition. The U.S. made a similar transition in the 80s from a manufacturing economy to a sales type economy that they would would base their economy on a consumer model, where you would have a consumer model instead of a manufacturing model. And a consumer model in this economy in the U.S. is about 70% of the economy. Thus, in China, with its over 1 billion people, it does make sense for them to move more into a consumer type of setup. And also at the same time, they want to get away from some of those pollution-causing type industries. So a de-emphasis on some of the heavy manufacturing, and at the same time, some of the manufacturing on the lower end is now in Vietnam and various other ports of entry. So China is trying to move up the chain and move more into knowledge work, because that's where the action is, and it's also where the cash is. And they're able to do this. You think in terms of, if you have 1 billion people, how many people are in that percentage will be going or are going to universities in China? And they're also upgrading their universities. Chinese students go throughout the world to acquire education and training at various institutions, some of the best in the world, whether they be in the EU, UK, or in the US. Thus, that knowledge is passed on. That's how knowledge work works. And you come up with better universities over time. But some of the developmental projects in the so-called West are done in China. And, of course, in China, they are outshining the West, particularly in technologies like 5G. That's the whole situation with Huawei there, the telecommunications giant. And they're also going into other enterprises, such as processes. There was an argument from the president of Intel at the time, the chip maker, that the idea of a country making its own chips was not a very good idea. But China has seen, since the trade wars, economic violence, sanctions, etc., that it is a very good idea. So they're working on that. They're also working on operating systems. At one time, China had what was labeled Red Linux, a version of the open source operating system Linux. So they're going to those sort of things. Huawei has got their own OS for their mobile phones. That will get better because the people at Google that make Android and Chrome, they're on a 9 now, which is Pi. They'll go to 10. That should be one named after a flower called Fuchsia. And it's just Japanese flower. And it will not have a Linux kernel. At least that's the plan. There will not be a Linux kernel in it. So those things are very open. There's no doubt about that. The technology called wearables. In fact, we had wearables actually enter into Major League Baseball. One of the Astros alleged is wearing a wearable under his jersey, which you can hear things, etc. So you're going to see more and more of wearables out here. In fact, some other people are talking about in the next 5 to 10 years you will not even have the smartphone. Period. Nonetheless, we will look at the beige book. We'll start out here with the producer price index. It was on the 15th of January. The producer price index for final demand edged up just 0.1% in December, seasonally adjusted. That is from the Bureau of Labor Statistics. Final demand prices were unchanged in November and rose 0.4 in October. On an unadjusted basis, the final demand index moved up 1.3% in all of 2019 after a 2.6 advance in 2018. You can see where that is going. December's increase in final demand index is a result of 0.3% rise in prices for final demand goods. The index for final demand services was not changed. Prices for final demand, less food, energy, and trade, inched up 0.1% in December, following no change in November. In 2019, the index for final demand, less food, energy, and trade climbed 1.5 after advancing 2.8 in 2018. Final demand goods, the index for final demand goods rose 0.3% in December, the same as in November. Most increase in December can be traced to a 1.5% advance in prices for final demand energy. The index for final demand goods, less food and energy, edged up 0.1% in contrast to prices for final demand goods. Food moved down 0.2. Final demand detail over 60% of December's increase in index for final demand goods can be attributed to a 3.7% advance in gasoline and petrol prices. The index for diesel, fresh fruits, melons, carbon steel scrap, residential electric power, and pork also moved higher. Conversely, prices for beef and veal fell 7%. The index for jet fuel and plastic resins and materials also declined. Final demand services, prices for final demand services were unchanged in December, following a 0.3% decrease in November. In December, 2.7% advance in the index for final demand transportation, warehousing services, offset by a 0.3% decline in margins for final demand trade services and a 0.1% decrease in index for final demand services, less trade, transportation, and warehousing. Product demand in December, prices for transportation of passengers jumped 8.5%. That's attributed to the holiday season. The index for machinery vehicles, wholesaling, machinery, equipment, parts, and supplies, wholesaling, health, beauty, optical goods, retailing, portfolio management also increased. In contrast, for margins for apparel, jewelry, footwear, Those have been lagging over the last few years. Accessory retailing declined at 3.7. The index for chemicals, allied products, wholesaling, guest room rentals, fuel, lubricant retailing, professional commercial equipment, wholesaling also moved lower. So in other words, there is still a recession, a downturn in manufacturing. With intermediate demand in December, prices for processed goods edged up 1/10, and the index for unprocessed goods rose 1.8. Processed goods for intermediate demand, the index for goods moved up 1/10% in December, the third consecutive rise. Most of the increase in December can be attributed to prices for processed energy goods, which rose 1/10%. The index for processed food and feed edged up 1/10%. Conversely, prices for processed materials, less food and energy, declined 2/10 in 2019. The index of processed goods for intermediate demand fell 1.7%, falling a 2.8% advance. That was in 2018. Leading the December increase in the index for processed goods, diesel fuel jumped 6.4%. The index for gasoline, primary, basic, organic chemicals, fabricated structured metals, processed young chickens also moved up. I noticed that at the market. In contrast, prices for steel mill products declined 1.8%. Index for natural gas to electrical utilities, beef and veal, and oil-based lubricant stock also fell. On processed goods for intermediate demand, the index there increased 1.8% in December after jumping 3.9% in November. Over half of the broad-based rise in December can be traced to prices for unprocessed foodstuffs and feedstuffs, which advanced 2.3%. The index for food less energy climbed 3% and 0.4% there. Major factor in December's increase in prices for unprocessed goods for intermediate demand was the index for raw milk. It rose 8.8%. Prices for crude petroleum, slaughtered poultry, who else? Steel scrap, slaughtered steers and heifers. Fresh fruits and melons also moved higher. Conversely, index for natural gas fell, and part of that is to climate, 4.6. Prices for corn and waste paper also moved lower. The index for services increased at 0.4% after 3 consecutive declines. Over 40% of the broad-based advance can be traced to prices for transportation and warehousing, which climbed 1.2. The index for services less trade, transportation, warehousing for intermediate demand, and trade services for intermediate demand moved up 0.2 and 0.3 respectively. In 2018, prices for services rose 1.8%, following a 3.1% in 2018. So prices, arrangement for freight, cargo, transportation climbed 4%. Index for machinery, equipment, parts, and so forth. Transportation of passengers, portfolio managers, television advertising. You usually expect those to go up in the political year. Staffing services also moved higher. In contrast to margins for chemical allied products, they fell 0.4%. Prices for stage 4 intermediate demand increased 0.3 in December. The index for both total goods input and total services input to stage 4 demand moved up 0.4%. We're back to fresh fruits and vegetables. Outweighed declines the index, and evidently they went up. A lot of people are moving to fresh foods and vegetables. We won't get too much into this stage here. The next consumer price index for January is scheduled to be released on Wednesday, February 19th. Let's take a pause here. WBRN Radio. And we will continue here. This is from the Federal Reserve. This is industrial production and capacity utilization. It was released on the 17th of January 2020. Industrial production declined at 0.3% in December as a decrease of 5.6% for utilities, outweighed the increase for 0.2 for manufacturing and 1.3 for mining. The drop for utilities resulted from a large decrease in demand for heating and unseasonably warm December. So again, you have that particular situation there. And industrial production utilization, a summary here. If we look at 2019 and July of 2019, it was 104.1, and in December it was 104.4, and the percentage change was negative 0.3%. That is on industrial production. Consumer goods 105.6, that was in July of 2019, and it was 105.1 in December of 2019. Construction at 107.9, that would have been in July, and it was 107.6 in December. And just looking at some of these groups here, capacity utilization from 1972 to 2018, it was 79.8. 1988 to 89, the high was 8.5, and 94 to 95 was 85, and if we go to 2009, that was the depression, 6.7. In 2018, in December, it was 79.5. In December, it was 77 there. And the growth capacity from 2018-2019 was 2.1%. That is the estimate there. And if we look at crude oil, well, in the 70s to 2018, it was at 86.1, and in December it was 87.8, 4.3 there in crude. And mining at one time was 87.1, and in December it was at 89.6, December 2019. So in actuality, it was 5.6. So for utilities, the growth from December 18 to 19 was 2.5% there. It was 73.5 in December, and in 72 to 2018, it was 85 point. It was 86.1. We're talking about crude here. Sorry about that. However, in November, for the fourth quarter as a whole, total industrial production moved down at an annual rate of 0.5, and at 109.4% of its 2012 average. Total industrial production was at 1% lower in December than a year earlier. Capacity utilization for industry sectors fell. The industrial sector, fell 0.4 percentage points in December to 77% rate, and that is 2.8% below its long run, and we talked about that 1972 to 2018. Major groups were mixed, and we talked about utilities here, and manufacturing output advanced to 0.2% in December, but decreased at an annual rate of 1% in the fourth quarter. Gains in December came despite a decrease of 4.6% for motor vehicles and parts. Assembly of light motor vehicles fell from 11.2 million units, that's annual rate there, in November to 10.3 units. Excluding motor vehicle sectors, factory output rose 0.5. The index for durable good manufacturing slipped 0.2, as a decrease for motor vehicles outweighed widespread increase in other industries. The index for non-metallic material products advanced 2.3% for larger gains amongst durables. The production of non-durables moved up 0.6, led by an increase of more than 1% for petroleum and coal products. For food, beverage, and tobacco, the output of other manufacturing, publishing, and extraction decreased 0.2%. Mining output rose 1.3%, most of the gain from petroleum or gas extraction. Capacity utilization for manufacturing edged up 0.1 percentage point in December to 75.2. The utilization rate for mining increased at 89.6% there. Now, the Federal Reserve Board plans to issue the annual revisions to the Index of Industrial Production as IP and a related measurement capacity utilization in the summer of 2020. The weight for market group splits of industry level indexes will be updated for information. The benchmark is now a 2012 benchmark. Accounts from the Bureau of Economic Analysis. Capacity and capacity utilization will be revised to incorporate data from manufacturing through Q4 of 2019 from the Census Bureau Quarterly Service Survey of Plant Capacity and New Data Capacity from the U.S. Geological Survey and the U.S. Department of Energy. So those are some of the things that are going on here with this. Let me go over here and we'll get housing starts while we're here. And this is, I believe, from the Bureau of... This is from the Reuters agency here. I'm not sure if we get this report or not. Just a second here. U.S. housing starts. We were going more deeply on this, but we'll do this. A 13-year high. This is from the Reuters in December. Very unusual, but due to climatic conditions, it was more favorable. Talk about phase one here. We'll try to stick with housing starts here. The shockingly large rise in home construction is likely to provide an unexpected boost to growth. That's from Joel Nyroff. He's chief economist at Nyroff Economic Advisor, Holland, Pennsylvania. However, the first quarter of 2020 might be a lot softer. Housing starts jumped 16.9% to seasonally adjusted 1.608 million units last month, the highest level since December of 2006. The percentage gain was the largest since October 2016. Groundbreaking activity last month was likely flattened by unseasonably mild climatic conditions that probably overstated the health of the housing market. Data for November was revised higher to show home building rising to a pace of 1.375 million units instead of the 1.37 units and 1.365 units. Housing starts soared 40.8% year-over-year basis in December. An estimated 1.29 million housing units were started in 2019. That is up 3.2% compared to 2018. Housing completions increased by 5.1% of the rate of 1.77 million units in December. Retailers estimate that housing starts and completion rates needed to be in the range of 1.5, that's 1.5 million to 6.6 per month to plug the inventory gap. The stock of housing on the construction rose 2% to 1.192 million units, the highest level since 2007. That was the beginning of the Depression. It's going to take more than an increase in construction to completely energize the ongoing historic inventory shortage. But more house building certainly won't hurt. That's Matthew Speakman. He's an economist at Zillow. For now, it appears that builders are in the game for change. The 30-year fixed rate has dropped to an annual of 3.65 from a peak of 4.94 that was in November of 2018. That's according to Freddie Mac. And though the survey on Monday showed confidence among home builders drop in January, it remains near levels last seen in the mid-1999. Home builders say they'll continue to grapple with the shortage of lots and labor, while buyers are frustrated by the lack of inventory, particularly amongst starter homes. Not very many starter homes are affordable homes out there. So that is basically where our single-family building, which accounts for the largest share of housing, jumped 11.2% to a rate of 1.055 units in December, the highest since June of 2007. Single-family starts rose in the Midwest and the populous South. They fell, however, in the Northeast and in the West. Single-family building permits slipped 5/10 to a rate of 916,000 units in December after rising 7 straight months there. The starts for volatile multifamily, that's apartments, vaulted to 29.8 to a rate of 553,000 last month. Starts for buildings with 5 or more units were the highest since 1986. Permits for construction of multifamilies fell. Not good news there. 9.6, a rate of 500,000 units there. So that is where we ended up. The U.S. economy ended up there. Very, very careful on some of that. Some of this information came from the Census Bureau. And let me just check one thing here very quickly. We'll go to the beige book and see where the beige book is taking us to. Wait a minute, just a minute here. We'll have to get back to it. Let's jump back here to the let's go to the trade agreement between China and the U.S. I've been looking at it. And we'll get to... we'll jump on Target sales here while we're talking about Q4. Target didn't have a strong holiday in the toy department that many expected. The news sent shares of Hasbro and Mattel lower as the toy market. If you recall, Toys R Us went out of business. They didn't have a hot toy. This is from CNBC. Target did not have a strong holiday in the toy department. Retailers on Wednesday reported its toy sales were flat. A big part of it. The shares fell 7% on the news. Meanwhile, it sent Walmart down 1%. Toy maker Hasbro dropped 2.5%, and Mattel more than 6% there. And we just throw this little piece in here, and we'll go to the I guess we'll go to the Chinese here. I want to get that out here. Okay, we'll back up just a little bit here and get our monthly new residential construction in December. This is from the Census Bureau in the U.S. Department of Housing and Urban Development jointly issued this. Building permits were at 1,416,000. Starts with 1,608,000 here, and housing completion 1,277,000 there. And let's get down to this. Sorry about the early confusion here. Work long enough, you'll find something. Anyway. Privately owned housing units authorized by building permits were at a seasonally adjusted annual rate of 1,416,000. This is 3.9% below the revised November rate of 1,474, but is 5.8% above the December 2018 rate of 1,339. Single-family authorization we're at the rate of 916,000. This is 5/10 below the revised figure for November at 921,000. Authorization for 5 units or more rose 458,000. Housing starts in December with seasonally adjusted annual rate of 1,608,000, and this is 16.9% above the revised November estimate of 1,375,000, which is 40.8% above the rate in December of 2018. Single-family units starts in December. We're at a rate of 1,555,000. This is 11.2% above the revised November figure of 949,000. December rate for units building more than 5 units were 536. Hopefully not too redundant here, but the estimate units 1,289,800. That was started in 2019. This is 3.2% above the 2018 figure. So we finally got that part finished up here. We won't be redundant here. We're sorry that we gave the royalties. We wanted to get over here and get this, and then we have completed it. Okay, very, very good here. And now let's go back to our where we want to go now is do the beige book, and we'll get back to we will go to the beige book now. Some of it, it'll clear up some of the lapses here. Okay, this is the beige book, and this is from the Federal Reserve. We'll get an overall here. Economic activity generally continued to expand modestly in the final 6 weeks of 2019. Dallas, Richmond noted above average growth, while Philadelphia, St. Louis, and Kansas City subpar growth there. Consumer spending grew at a modest to moderate pace in a number of districts, noting some pickups from prior reporting. On balance, holiday sales were solid, with several districts noting growth in important online shopping. Vehicle sales generally expanded moderately through a handful of districts reported flat sales. Tourism was mixed, with growth reported in the eastern seaboard districts, but activity a little changed in the Midwest and West. Manufacturing activity was essentially flat in most districts. Transportation activity was mixed across the districts. New residential construction expanded modestly. Commercial real estate activity varied substantially across the district. Agriculture conditions were little changed. Wages and employment wages rose modestly in most districts. The labor market remained tight throughout the nation. Most districts reported widespread labor shortages as a factor for constraining job growth. In a few cases, business expanded. A few districts noted brisk demand for professional, technical, and managerial workers. A number of districts reported job cuts, a reduction in hiring amongst manufacturers, with scattered reports of job cuts in transportation and energy sector. Prices continued to rise at a modest rate during the reporting period, as did input costs. A few districts indicated some businesses were passing along a tariff cost. We talked about this. And in Boston, economic activity expanded at a modest pace in the closing weeks of 12. Software and IT services cited relatively strong growth. Manufacturing, retail also reported revenue increases from a year earlier. Residential real estate market saw continual inventory shortages. Labor market tightness persists. Outlooks were positive. In New York, the labor market remains tight, although hiring activity was subdued and wage growth modest. Loan demand grew through a financial sector. In Philadelphia, on balance, business activity slowed to a slight pace of growth during the current period, the beige book period. Most firms or enterprise expressed cautious optimism. In St. Louis, economic indicators have slightly improved since our last report. Tourism, hospitality contacts generally cited that business activity met expectations over the holiday. In Cleveland, the 4th District continued to expand at a modest pace as a result of continued strength in some key sectors and warning headwinds from manufacturing and freight. Retailers reported better than expected holiday sales amidst tight labor market. Meanwhile, selling prices advanced at a steady pace. In Minneapolis, economic activity grew at a modest pace. Employment was mixed across the states in the region. Consumer spending rose with initial reports on holiday sales coming in positive. Manufacturing activity was flat overall, and commercial and residential construction grew modestly. Oil, gas, drilling activity held steady there. On to Kansas City. Activity edged up in late November and December, driven by robust retail spending during the holiday season. Strong sales in professional and technical services. Wholesale sector. Economic activity in energy and agriculture sector also remained weak. In Richmond, economic activity grew modestly. Retail, travel, and tourism picked up. Home sales and commercial real estate, leasing, and construction remained strong. That is there. In Atlanta, economic activity improved modestly. Labor market tightness continued. Non-labor input costs rose in line with expectation. Retail and tourism activity were strong in that district. On to Dallas. Home construction continued to rise while energy activity remained weak. That's unusual for Texas anyway. Hiring continued at a steady pace. Selling prices were largely flat even as input costs rose. Outlooks generally improved with reduced trade uncertainties, boosting optimism in Dallas. In Chicago, consumer spending increased modestly while business spending and construction real estate activity increased slightly there. Manufacturing and employment were little changed. The prospects of a trade deal boosted that in Chicago. We'll have a lot of wheat around there. In San Francisco, expanded at a modest pace. The labor market remains tight. Wages increased further. Price inflation was up slightly. Sales of goods increased modestly, and consumer and business activity up modestly. Modestly was the key. Agriculture sector was mixed. Residential real estate expanded as strong, while commercial real estate softened a bit in San Francisco. So I think we'll leave it at that. We won't go into much here. What we'll do periodically, we'll come back to the beige book. So a little on Boston here. Let's see. Black Friday, Cyber Monday results were very strong, while Green Monday, that was December 6th, was a bit soft in what was a short holiday season. Contacts expressed some concern that higher costs were related to labor markets, tariffs, in combination with a very competitive retail environment put a damper on revenue. However, capital spending plans for 2020 are on pace with or exceeding investment expectations in 2019. Automobile industry contacts reported November vehicle sales were 2% higher than a year earlier, continuing at a fairly slow but steady pace. Travel types, occupancy rates were down slightly compared to 2018. For 19 as a whole, occupancy rates will also expect a slow decrease in the Boston area there. In a Boston area hotel market through November, room rates were virtually unchanged from 2018, but new hotels increased the supply, and with more new hotels planned, the travel industry expects 2020 to be a good year. Larger conventions booked in Boston also helped greatly with the greater number of H2B visas issued to fill staffing demands. That's a kind of a curious situation there. At best, now we'll get to the economic and trade agreement between the governments of the United States of America and the governments of the People's Republic of China. The governments of the United States of America and People's Republic of China collectively, parties, recognize the importance of bilateral economic and trade relations, recognizing that the interests of both countries that trade grow and that there is adherence to international norms so as to promote market-based outcomes. Convinced of the benefit of contributing to harmonious development and expansion of world trade and providing a catalyst to broader international cooperation, acknowledge the existing trade and investment concerns that have been identified by the parties, recognizing the desirability of resolving existing and any further trade and investment concerns as constructively and expediently as possible, have agreed on the following. Intellectual property. The United States recognizes the importance of intellectual property protection. China recognizes the importance of establishing and implementing a comprehensive legal system of intellectual property protection and enforcement as it transforms from a major intellectual property consumer to a major intellectual property producer. China believes that enhancing intellectual property protection and enforcement is in the interest of building an innovative country and growing innovation-driven enterprise and promoting higher quality economic growth. In 1.2, the China and the U.S. therefore affirmed that they will undertaken provision with respect to intellectual property. Parties shall ensure fair and adequate and effective protection and enforcement of intellectual property rights. The United States emphasized this is trade secrets and confidential business information, that China regards trade secret protection as a core element of optimizing the business environment. The parties agreed to ensure effective protection for trade secrets and confidential business information and effectively appropriated against misuse. Scope and actor liability for trade secrets misappropriation. The parties will ensure that all natural and legal persons will be subject to liability for trade secrets misappropriation. That's what they call it. China shall define operators in trade secret misappropriation to include natural persons and groups of persons and legal persons. The United States affirmed the establishment of U.S. measures afford the treatment of equivalent to the provision in this article. Scope of provision of constituting trade secret manipulation. The parties shall ensure that the scope of prohibitive acts subject to liability for trade secret misappropriations provide full coverage for methods of trade secret theft. China shall enumerate additional acts constituting trade secrets misappropriations, electronic intrusion, breach and indictment of breach of duty not to disclose information that is secret intended to be kept secret. Unauthorized disclosure or use occurred after the acquisition of trade secrets under circumstances giving rise to duty to protect trade secrets from disclosure and limited use there. I think it's important we get this in here. A burden and shifting in a civil procedure. Parties shall provide the burden of production of evidence or production of proof as appropriate here. China shall provide that the proof of burden of proof or burden of production of evidence as appropriate shifts to the accused party to show that it has not misused a trade secret. Provisional measure to prevent the use of trade secrets. Parties shall provide for prompt and effective provisional measures to prevent the misuse of trade secrets. So this basically is a core. We'll impinge this on. We're not going obviously through this whole thing here. Criminal enforcement parties shall eliminate any requirement that the holder of a trade secret establish actual loss as a prerequisite to initiating a criminal investigation for a misappropriation there. China shall, with all interim, as an interim step, clarify the great loss as a threshold for criminal investigation. And some of the penalties put down here shall provide for application of criminal proceedings and penalties. The U.S. affirms the act, and so forth and so on here. Pharmaceutical related intellectual property. Pharmaceuticals are a matter of concerning people's life and health, and there continue to be a need for finding new treatments and cures, as for cancer, diabetes, hypertension, strokes, amongst others, and to promote innovation and cooperation in the pharmaceutical sector, and to better meet the needs of the patients. The parties shall provide for effective protection and enforcement of pharmaceutical-related intellectual property, including patient and undisclosed tests and other data submitted as a condition of market approval. This is very good here. China shall permit pharmaceutical patients' application to rely upon supplemental data to satisfy regulatory requirements for patentability, including sufficiency of disclosure and inventive steps during the patient's examination process there. So these are some of the things. I thought we would get to a little bit of this, because part of the problem with corporate media is that the reporting never really got down to what was in the actual trade agreement, other than 50 times of what China would do. We got into some, and as we continue programs, we'll get into more of what is happening. The markets, incidentally, have been mixed the last few days. Let me see if I can get this as we close out, get over to the BBC here and see what we can see. We won't be seeing anything. Move around here a bit. Thought we had the one of these. Maybe you did, maybe you didn't. There you are, market data. If you find something, if you look for it long enough. Anyway, nonetheless, this was on the 18th today. Anyway, the FTSE 100, the change in the FTSE at 64.75. In Amsterdam, where were they? The ALEC was at 3.51. In Paris, they were at 61.69. In Frankfurt, the DAC was at 96.70. Eurostas 50 was at 34.12. And in Madrid, they were at 108.80. In Bombay, 12.81. In the Hang Seng in Hong Kong was at, they had a good day, 173.83. The Nikkei was at 108.31. And well, let's do the Dow here. We usually skip them and go to the other market. Anyway, basically they closed up at 50.56. That was at 29,348.0. That was the Dow Jones. And the Nikkei was up 31.81 at 9,338.64. And the S&P 500 was up 12.81. So we've got the American markets out of the way. We're really hitting along here. And we'll go to Brent crude at $64.85. It was up 23 cents. That is Brent crude oil futures. And West Texas was at $58.58. It was up 5 cents. T-Boone picking ancestors are jumping for joy there. On the Forex, gold was at $1,555.20. Not changed there. And the Forex index, that was in the morning. And let's get to PM here. It was up $5.55 by the time PM rolled along. That would be $1,554.55. Natural gas has fallen once again. So that is the state of natural gas. Climatic conditions in most parts here in North America have not been bad. Some Arctic blasts coming in. We had 70 degrees last week in Boston. The Davos conference is coming up. Next week we cover it. Greta Thunberg will be there. Yeah, but according to this, so will DJ Trump. Interesting here on the characters that will show up at Davos. A diverse crowd that is in the held every year. It launched in 1971. That it launched there. Even a picture of old Tony Blair. I don't know if he's around there. Prince William's it was last year. David Attenborough, a climate person there. About 3,000 people usually show up. A third of them for business. To go, you get an invitation, which case the event is free. Are members of which it cost 480,000 pounds. A lot of money there. So leading figures from the EU, UN, Coca-Cola, Goldman Sachs, IBM attend there. George Soros has been there in the past. I don't know if he'll be there this year or not. And who the people are that there's some person at where are they? Time Magazine's editor at large, Gildasarius, described Davos as a family reunion for people who broker the modern world. Well, whatever, as they say, but we still cover it, and the number of speeches that are there. There used to be a different regiment when you covered it, you were credited, etc. Now they have a website that the speeches eventually appear there. Martin Wolf, he's been a fixture there as chief economic commentator. As the Financial Times said, elites are always a bit out of touch, and that's their nature, but it is important to have a world without them. It's vital for these people to meet regularly. Well, anyway, whatever. So a lot of characters show up. As a picture of Greta, because due to deliver another combative speech. That's good. They need to hear what Greta Thunberg has to say. And some other people will appear there also. The Seiner Marin, that is the Prime Minister of Finland, is 34 years old. I'll be the youngest person there. And that is it. Somebody from Bollywood. I'm not sure who is from Bollywood, but anyway, they will all show up. And we'll probably have a special report on it, so we can summarize Davos, as it come in. We get their press releases constantly here, and this will do it for us. This is Old Numbers Man, the Jerry Pippin broadcast booth on the 18th of January, 2020. I guess is a way of saying it for those in business. Make next week a productive one, the first full week after all these holiday shenanigans and flummery here. Well, not a full week, I'm sorry. In the U.S., we have the Dr. King Day. Happy Dr. King Day to everyone. There is an expansive survey in the Washington Post on African Americans. If you go to our political site, Bostonred, it'll be there. You can check it out or go to the Washington Post. It is by the Washington Post and Ipsos. That is Reuters. It used to be Europa. We used to work for Europa. Anyway, nonetheless, good day.